Good evening, everybody. Okay, hope everybody's having a nice winter evening. We've got kind of a winter wonderland outside. We've had a couple inches of snow today. Plus all the turkeys are back. Had about 6 or 8 deer feeding today. Okay, as we can see, this is the kind of the gist of the afternoon comments today, or newsletter, that the Dow was down 12 points, but you can see what the overall trend is. The NASDAQ was up pretty strong. So the overall analysis is nothing has changed. We're still in a good, steady uptrend. So I think we've scheduled the how to be mentally prepared to be mentally prepared session, which is going to be training going up to the scale a little bit of how to be ready to trade no matter what type of trading program you have. And so even if we think, which I think, candlesticks is probably the best trading strategy you could come across, that if you still don't know how to have yourself mentally trained to invest and how to expect when you're investing, you're not going to be able to be successful. And the reason I say this is I've got a lot of people that have emailed me over the last couple of weeks with they're saying, now this is the first time that I've understood how to make money. Now, obviously, the market helped with that quite a bit. But I often get people saying, yeah, I made good money, but not as good as what everybody else seemed to. And as we discussed it, turned out that they were still holding on to positions that were heading down, even though they had quite a few that were heading up. So it's the old, equation that if you've got stocks going up and stocks going down, you're pretty much going to just be even. Fortunately, they were getting toward the side of having more stocks heading up than down. But part of the successful investing is getting away from that mental crutch, not crutch, but fupa of continuing to hold losing positions. So part of this session this month is going to be training people how to be mentally prepared to trade effectively, which is, number one, knowing that you're going to be losing money on trades, but how do you get yourself set up to where you get rid of those trades very quickly so you can move that money on to something else that's going to make you money. Then the next part of that training is knowing what to look for. Are you doing day trades, no portfolio, no status on your picks? Colleen, no. What I'm training people to do is look for the trades that they know is going to be successful. I'm not trying to tell people when to buy or when to sell. I'm trying to train people on looking for the trades that you want to get into. Now, how you trade that is up to you. If you're a scalper, if you're a day trader, a swing trader, a long-term investor, that's where you want to learn how to interpret and evaluate whether that chart is doing the right thing for your trading. Carl, they've been saying the odds of a major pullback is going to occur ever since December of last year. 2 Decembers ago, over a year ago. So we still don't want to be trading on the basis that there are odds that something's going to happen. The best thing we've got going for us as far as candlestick investors is evaluating what the market is doing. So far, if we had pulled out money or pulled out of the market 2 months ago, 4 months ago, 6 months ago, I think I mentioned the other day that look at the number of supposedly sophisticated money managers that said they pulled out of the market waiting for a pullback, and they've been sitting for months. Yeah, Salam, exactly. There's nothing out there that's telling us there's any major change of investor sentiment. So there's one basic premise that the Japanese race traders always profess, and that is let the market tell you what the market is doing. So I get many private messages saying, well, what do you think the market's going to do in 2 months or 6 months? And my only answer is I have no earthly idea. We don't know what's happening out there. We don't know if we're going to have a nuclear war. We don't know whether, all sorts of things could happen out there. Right now, the market's just telling us they're still buying this market. Okay, so part of our training this month is going to be how do you get prepared to be in the trades that have high probability setups. We recommended TEL today based upon the best friend's signal on Friday. Came all the way up through all these moving averages. It opened positive today. Didn't hurt us, didn't help us. However, we know that if it opens positive, what we can expect. Number one, after the doji, it's going to move positive with high probability. 2, it could produce a doji sandwich. The trading range of tomorrow is the same as the range right here. Another thing, Carl, is we try to keep political commentary out of here because in the 40 some odd years I've been investing, I've never made a single dollar either convincing somebody or listening to somebody as far as what their political view is. What I want to try to keep the chat room is what is out there that will make me money. So anyways, yes, tomorrow on a positive open, you've got a doji sandwich set up. Tomorrow on FANG, we recommend because of kind of see that it broke through this little downtrend. If this opens positive tomorrow, what do we expect? A doji sandwich. And if we have a doji sandwich the same magnitude as this, what's it tell us about this whole region, this whole area? It's breaking out. So this is part of that allowing or being able to visually recognize where a high probability trade setup is going to occur. Same scenario on Square. Notice what Square did on Friday. Doji, smack dab on the 50. What's our simple doji rule? It's going to move in the direction of how they open after a doji. What did that tell us about the 50? 50 is not going to be acting as a resistance level. If it opens positive tomorrow, what's it tell us? Doji sandwich. Still a good breakout situation. No, this is not a 15-minute chart, Carl. This is a daily chart. It's delayed by 15 minutes during the day because this is CQG, and I don't have their up-to-date or their live charts because I usually use these charts to illustrate afterwards. These are the daily charts today. If I'm going to trade off of a live time. I can do that with commodities and futures on here, but not on the stocks. I've got other charts that I use for trading off the stocks or trading the stocks live. Okay, so essentially we've got stuff that are setups that are extremely good for telling us when it's time or exactly what to do to get into a good trade, not only in the right direction, but the exact right time. So some of you that are new here tonight, these are the type of situations that we're in. This is what we call a steady eddy. We can see when it broke out right in this area. Let me get my little trend thingy bob going here. Right in this area. And then we've got a very simple strategy, especially coming out of a fry pan bottom. All we have to do is stay long as we don't see a sell signal and a close below the T-line. On top of that, we also use the simple education that the rice traders tell us. Where do most people sell? They panic sell at the bottom. Where do most people buy? They start buying exuberantly at the top. So if you've got a good steady uptrend and you start seeing this happening, what's the first thing you want to be prepared to do? Get ready to start taking profits. That's the same thing we saw last week on our INSEE trade. Look what happened over here. Started getting exuberant. So we have very simple parameters. First of all, we took profits on the 10-minute chart up here. Why? Because we had gapped up in the overbought area that far away from the T-line. If you didn't sell, and I say if you didn't sell, there's going to be times, or depending on your schedule, if you're at work all day and can't watch your charts, at least you have a strategy. The next day, you immediately put your stop at the open of the previous day that gapped up. Because if it went down through there, where do you think your next target was going to be? Back to the T-line. So everything we do as far as a candlestick analysis is just common sense based upon knowing what usually happens in human nature. Ron, that's going to be part of what we do this month in our, I don't know what I'm going to name it. I think it's going to be getting mentally prepared to be mentally prepared, so that you don't give that. And that's what I get. That's a lot of feedback that I got over the holidays was I did great on my good picks, but my ones that were losers, that kind of offset my gains. So we went back and analyzed and say, all right, why were you holding on to your losers? I see INSEE now. I guess the INSEE is confusing. Oh, INSY, yes. It's S. They've got on this service. It's the S is to say stock. Boot. Very simple analysis. There's your message. When the message told us the profit taking was over, what was the criteria for holding on to this position since then? You stay long as it doesn't close below the T-line. That simple rule right there has made me tons of money, and it doesn't let me get whipsawed in and out. I can sleep well at night just use a simple rule that if it closes below the T-line, or above the T-line, stay long. If it closes below the T-line after a pattern move, take your profits. Hudson finally moved today. We've been waiting for this one to break out right in this area. Notice how it broke out today. There's your doji sandwich. And what do we know about a doji sandwich? There's usually going to be more upside. let's see, SGRY, SGRY, another steady eddy coming out of this bottoming action. What do we do with this? You just stay long. Hold on to your individual requests. We'll get to them. But we should always have a catastrophic stop just in case. Yes. If you're long this stock, nothing wrong with it at all. But you're in the overbought condition. I would just simply put my stop today or tomorrow morning at today's open. If something happens that slams it, I want to be out as fast as possible. Mid. Another one that we recommended a while back. Look at our bobble breakout, which is just a more defined J-hook pattern. You can see where it failed at the 200. You can see where it supported at the T-line. You can see what happened when they came back up through the resistance level. Next wave. So essentially, what type of pattern do you have here? J-hook pattern. If you took out the 200-day moving average, it'll just be a J-hook pattern. At this point, we can see more obviously that the J-hook pattern was selling at the resistance and they were buying it again when it came back up through the resistance. CRR, fry pan bottom. Nothing to do here except stay long as it stays above the T-line. John, I'd give it to the end of the week on mid for if you're in January. That would be, what is today? The 8th. That'd be the 12th. Then you might start thinking about, now, so far on mid, there's nothing that's telling you there's any change of investor sentiment, and you're not that close to expiration. But there is one calculation that you can make. Remember what our J-hook pattern usually illustrates. Wave 1 and wave 3 are going to be approximately the same. Looking like right now wave 1 and wave 3 are getting approximately the same. So, so you pretty much want to start being a little bit more diligent for watching for a reversal. Now, if that reversal comes, take your profits. Now it might not be the best thing to roll over into February. Might go on and find another good trade. Would you have sold? If I was playing mid, yes. You can see how you had sell signals here. Kind of had a bearish engulfing signal after failing it. So where do you think it was coming back to? Probably the T-line. However, was it going to support on the T-line? No idea. Could have been heading here. Could have been heading back here. You close it out. But then what was the evidence that we saw at the T-line? They weren't closing it below the T-line. You get ready to buy it back here. So that's the whole point of using candlestick charts, is definitely having the ability to see what's happening at levels that everybody else is watching. The T-line is the 8 exponential moving average, Carl. That's this black line. The T-line is the trigger line. There's a very simple concept. If you see a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close below the T-line. Much more effective than Bollinger Bands or anything else. So I tell people, don't take my word for it. Throw the 8 exponential on your chart and see how effective it works. For crying out loud. How effective it works for maintaining a trend as long as it stays above the T-line. A bearish engulfing on 2. It can be. I mean, what was this telling you right in here, Carol? Telling you they weren't taking it up. They were having a hard time staying up above the getting up above the 200. Where were you stochastics-wise in the overbought area? So you've got overbought area. You're starting to see sell signals right at a major resistance level. What are the probabilities tell you? It's time to take some profits. What's the worst case scenario when you're in this high probability area? But if you took profits, you can always buy back when the next buy signal shows up. Or in this case, the J-hook pattern or the bobble breakout. So there's two reasons why you want to utilize candlestick signals and patterns. Because the probabilities, number one, tell you that you're probably going to be moving in the correct direction. And two, the results of a pattern breakout or confirmation is more likely going to produce much bigger profits than merely just an uptrending stock during an uptrending market. The reason we recognize them as patterns is because for centuries they've worked the same way, that human nature works the same way time after time. KTOS. There was kind of our bobble breakout. There's our shooting star. So what's our scenario tomorrow? We definitely want to see it open positive and trade positive. If it opens lower, we want to take profits because where is it likely going to come back to? Test the 200. I'm sorry, the T line. Dr. Emil, hold on, we'll get to it. Let's see, where am I? XNet. Kind of observe the obvious. When it kind of broke out of this wedge with a doji sandwich, you just stay long as it stays above the T line. SQM. We recommended this because of the message. Remember, the message is they gap it up, but it's not a good day. So a lot of people say, this doesn't look good. But you always have to remember, what is the message? The message was that they were coming into this with great enthusiasm. So what do we want to see now? We want to see that when the profit taking's over, we want to start buying because of that great enthusiasm. It told us the bulls are starting to take control. Overstock. This is let me make this smaller. This is part of that very instantaneous analysis. Which way is this trend going? Obviously up. What's this trend doing every time it hits a support level? They're buying. Where's a good buy place? The T-line. What type of signal do we have here? Morning star signal. Where do you think our next target should be? If you drew a line up through the tops, up here someplace. So right here is a high probability trade. One, because you got a morning star signal above the T-line. You can start buying it on positive trading the next day. Two, you can kind of calculate where it's heading because it's an uptrend and seems to be an upward trend channel. And three, you know where to get back out of this. This opened here, came up here, and then closed back below the T-line. Told you that it wasn't a trend going this way. It was going sideways. The gray line is the 34 EMA. Now, I usually had the 20 EMA on here, but after Doug Campbell came on one night, I used to have the 34 on my charts. I put it back on. I'm pretty sure this is the 34. Modify. Yes, this is the 34 exponential. So it also works as a higher probability support and resistance level than the 20. Now the 20 works most effectively if you're in a big steady uptrend. The 20 will work well. Splunk. We bought this the other day with options. You can see what happened right here. Slow curve breakout of this resistance level. What do we expect now? Wave 1, wave 2, wave 3. EXXI. Well, what's happening here tonight where these charts just are not acting well. It needs to open positive, but if it opens positive, what type of pattern do you see setting up? Well, this is our classic fry pan bottom, J-hook pattern. So this becomes an excellent buy on a positive open tomorrow, knowing that if this here's wave 1, wave 3 should bring us right back up into the trading area. What did it say? So the reason I'm going through a lot of the ones that we're already in is to kind of give everybody an update of why we're in them, and the whole point of trying to get into good trades is to scan and find what your best trades are. Well, we're in some of the best trades. So even as I go through scans every night, I'll see a chart that looks real good and then realize that we're already in that one. So here's another fry pan bottom on IMMR. First logical target right now is the 200-day moving average. NS, one of the oil companies. Another one that could be bought on positive trading. Notice your fry pan bottom breakout and where the breakout occurred at the 50, the 34, and at the beginning of the pattern. This just tells you it's high probabilities there's good solid strength in this one. Teradyne. The reason we bought this one is the most powerful of all our signals is the kicker signal. Something that's going on here that is just not working out well tonight. What's happening? Your kicker signal. Kicker signal is your strongest candlestick signal. Opens here, closes here. They gap it up the next day and go the opposite direction. They've definitely kicked this in the opposite direction. We still have some tile. Fry pan bottom. How long do we hold on to this? As long as it stays above the T-line. Now, the reason that Carl was kind of rattling your cage a little bit about expecting a pullback is because we can tell what's happening in investor sentiment. Look what happened in Tesla today. This market is not nervous. They're still buying things. Tesla started moving right back up again. NVIDIA. Fry pan bottom. Look where we are, right here at the breakout level. It looks, I think they did actually break out. Gapped up through the resistance level. So this one's probably still has more upside coming up into the trajectory. But what it does illustrate is that there isn't any concern right now out there in the market. They are buying, even though the Dow is off today, they're still buying these stocks. Amazon also broke out of the fry pan bottom. Netflix. Notice what happened when it broke out. There's our doji sandwich breakout. So if you add up everything that we know about a doji sandwich, first of all, when it gapped up above the 50 after the doji this level, what did that tell us? It told us they weren't concerned anymore about these resistance levels. We're probably in the next wave to the upside. Apple, not one of the better of the charts, but you can see they're not selling it off. They're still moving sideways. Where did the strength come from? They've got some strength right here at the 50. Where's the best place to really go after this? If they can break out through the top of this channel. Nugget, telling us what's going on in the gold stocks. A little bit of backing and filling. And where did it occur? Oh, happening right up here at the 200. What happened today? Doji on Friday, bearish confirmation. Where's our next likely targets? Either down here or down here. The Stochastic's heading down. What are the probabilities? They're taking it down right now. And Labu, same scenario. Now, whether you trade the indexes themselves or you're trading something in that industry or sector, pretty much telling you they're selling that sector off right now. So you want to be, if you have something, a biotech stock that's been acting well but now getting a little bit soft, you can pretty much see that it's starting to, that sector is starting to back off. You might be a little bit more diligent as far as watching what that individual stock is doing. Okay, some things that are obvious. When you have a breakout like this, your best friend signal, it usually implies there's going to be more upside. This is why we call this the best friend. Because not only does it tell you you're going to be in an uptrend, but it usually tells you you're going to be in a fairly strong uptrend. BUZI, kind of the same scenario. There's your best friend breakout. Big upside. So today, POD had a nice chart. Kind of your best friend breakout. Now this is where you put your, what we call convergence analysis together. Number one, your best friend breakout. Number two, look where your stochastics starting to throw up. Number three, gapped up through the T-line. Number four, broke up through this level. What's that pretty much tell us? There's strong buying. That's usually an indication there's going to be some more upside. Steve, yes. Now remember, whatever way you want to buy something, you know, $78 stock, I'd probably be more apt to be buying the buying options versus the stock. Oh, let's see. STX was what we call your best friend, not your best friend, your message. Doji gap up, but notice what happened after they gapped it up. This is why we want to identify each one of the signals. This is what happens here. Well, that was still a strong move. It was profit taking. So what do we want to look for? We want to see when the profit taking stops, then we can start buying. Why? Because we had a strong move, that big gap up. ALB, same scenario. Your best friend gap up, kind of a fry pan bottom. What's this all imply? There's a lot of strength coming in right now. Okay, let's see. So going back to the simple analysis that you're going to get much bigger returns by buying the patterns. ALDR, Morningstar signal. Notice what it's done ever since they started breaking out with a strong buy signal. 12.20 to 15.20, 3 points. That's a good 25% to the upside. Again, hold on to your individual stocks until we. I'll tell Jim to do the double line. When he does that, then get to type in 2 that you want to take a look at. Right now, we're going to kind of go through some that have good-looking charts to them. Same scenario on PTCP. Look where it kind of broke out, right in this area where that whole pattern started. So this is not unusual analysis. This is the fact that investor sentiment works the same way time after time. That's why we can recognize the patterns. Mark looks like it's broken out of the fry pan bottom. BBX, uh-oh. Why? Yep, I'm going to go right on to the next one. NVRO, there's your best friend. If this opens positive, what do we expect? A 45 degree to come off of here. VIPS, another breakout to the upside. Look for a 45 degree to come off of here. Crocs, notice the signal as well as the pattern. Look at our abandoned baby. Gapped it down, gapped it back up. What type of pattern do we have? Kind of a little scoop pattern. You definitely want to be buying this one on positive trading tomorrow. Because what do we expect coming out of a scoop pattern? A 45 or a very strong slingshot effect. And let's see, we did K. Did we do K? Maybe not. A2. There's that breakout. Where do you think the next bear's extending it to? Right up there to 200. When you see something like this, that tells you there's a whole new dynamic, especially that slow curve. When we do our training sessions, I usually pull up the slow curve because you make your biggest profits, or I've made the biggest profits on the slow curves, because usually when they break out, it's usually a very massive price move. So whether you're buying the stock or buying the options, you get the timing right on the nose, very exact. This is Watt. Notice what the message is on this best friend breakout. That something big's happening. So now we have the opportunity to analyze based upon candlestick charts as far as what's happening in active stocks. So I'd still be a buyer of this, especially if it came back up through today's open in tomorrow's trading. That would tell me my J-hook pattern is starting based upon the doji gap up, starting the next leg to the upside. Yeah, you could call Crocs a Morningstar signal also, but the abandoned baby, is a more potent Morningstar signal. MJX, I think, is the index. Is it for the Bitcoin? And it's not coming up. Son of a gun. Look at MJX. So these are the things that we want to apply to our analysis. Look what happened right smack dab on the 50. Doji, bullish confirmation. Wave 1, wave 2, wave 3. This just becomes an extremely high probability trade setup. So because human nature works the same way time after time, the more pieces of evidence that we can put in that we found the spot where they're buying just becomes that much more evident. And that's what the whole purpose of candlestick signals help us with. Big down day. What's our bullish Harami tell us? The selling has stopped. Is this a buy? Yeah, it looks pretty good at this point. We got a bullish Harami confirmation in the oversold area. You might want to be a buyer on positive trading tomorrow if it comes up through the T-line. Also, how far is this pullback? Well, if we can look at everything that we can visually see on the chart to see why everybody else might be buying right here, over here, and you throw the Fibonacci retracement numbers on. Look where this pulled back to. practically smack dab to the 61%. Now it's just above the 38%. So does that mean that's where it occurred? That means the people that were trading the Fibonacci's were watching, and that's where they were buying. It just gives us reload the page. Still no sound. Jim, can you help Steve Chen with sound? Okay, what have I done? Let's see. AVXS, AVXS. Where the long-legged doji occurred, right smack dab on the 50. So the purpose of seeing what's happening in investor sentiment based upon the signals, the candlestick signals, tell us exactly what's happening at levels that everybody else is watching. Today they confirmed it. Still be a good buy if it opens positive tomorrow. Because what's that tell us about the pullback? That's where they decided to reverse it and start taking it back up again. So I know there's some people been watching Mara. Mara basically hit the 50 today. If it comes back up through the T line, where's your next target? Probably right back into this range. GCO, what's this setting up for? Look at all the criteria that you can see right on this chart without having to be guessing. There was our doji, bullish confirmation. Where did it occur? Right smack dab off the 50. The uptrend started. What did it do when it got to the T line and went through? Where was your next target? Probably up here to the 200. Where do most people buy? They buy exuberantly at the top. What happened when it hit the 200? The next day they did a bearish engulfing signal. It was time to close out the position. Now what do we got going on? Well, if we know what a bobble pattern is, we know that if we took profits here, we can be buying back on positive trading. Because what's the probabilities of a bobble breakout working? Extremely high. Let's see. No, Tom. Each person can make their own decision of what time frame they want to trade. I'm a swing trader, so most of my trades usually last anywhere from 2 to 10 trading days. So I'm probably closing out right here because if you cut the chart off right here, if we are referring to this one, I guess, Tom, we don't know whether it's pulling back here or pulling back here or down here. Take your profits. They gap it up in the overbought condition, right at a major moving average. The next day there's a sell signal. Close it out. What did that sell signal tell us? They weren't going through the resistance. If you are longer term hold, yeah, you might sit here with the criteria, all right, I'm going to hold on to it as long as it doesn't close below the T line. That day would have been a little bit iffy. A doji just below the T line. What do we need to see the next day? We need to see it open positive and trade positive to stay in it. I would have been out right in here, and I'd be back in it if it opens positive and starts trading positive tomorrow. Dean Foods. Always like to trade Dean Foods. Forget how many summers ago it was when we were up at the lake. We had already recommended Dean Food. It went from 12 to 17. Did a sell signal. We sold it out. Pulled all the way back down to 12. And while we were sitting there doing our private training session, I guess about 5 of us sitting there at the lake, and it did a bullish engulfing signal. So I said you can be buying this one. And 2 days later, they came out with earnings and popped right back up to 17 again. So it's always been a happy one. But you can see the kicker signal. Opened here, closed here. The next day, they gapped it up and opened it above where it opened on Friday and went the opposite direction. This one you can definitely be a buyer of on Positive Trading. Now you got wave 1, wave 2, wave 3 should be the same magnitude as wave 1. Tom, fortunately, the advice you're getting is not necessarily just because I'm got great wisdom. It's because before candlesticks came along, I was the worst investor in the world. I was a stockbroker for 8 years. I realized that most analysts on Wall Street had no more idea about what made prices go up or down than anybody else. But the more I learned about candlesticks or studied candlesticks, I kept thinking, man, this makes sense. And the more I studied it, the more sense it made. Finally, I got to the point where I didn't have to hope that something was going to work. When I put my money into something, knowing the probabilities, I knew that every time I put a position on, the probabilities were in my favor that I was going to make money with it. What is the difference between a down candle above the 8 EMA and a sell signal? Not every down candle is a sell signal. Now, in this case, there's a bearish engulfing signal. I'll see if I can find one somewhere. Oops, this chart not going to be what's happening here. I'll answer, ND, I'll find one to kind of answer that question. Oh, Steve, I hate when that happens. Oh, I'm trying to think. Let's just take a gander at something that. Oh, yeah. You can have a down day, but it doesn't necessarily. I'm trying to find one. Doesn't necessarily mean that was a reversal signal. Then again, you can have a signal, but if it's not the formation signal, if it's not occurring at the right conditions of the trend, I mean, a candlestick buy signal in the overbought area doesn't mean a whole heck of a lot. Anyways, you want to stay short on Roku. Notice the bearish flutter kicker. Flutter kicker is one of your strongest signals because it's a kicker signal. It opens here, closes up here. Good bullish day. Next day, they gap it down below the previous day's open and do a doji. And what do we know about the doji rule? It's going to move in the direction of how they open it after a doji. In this case, they opened it lower and took it down. So if you took out that little doji, the flutter, you basically have a kicker signal. Now when that probability starts working against you, you got to get out of the trade. One of the bugaboos that I always had about getting out of a trade was I was always worried that I'd get out and then it would take off without me. At least now I know that if I get out of a trade, I can get back in on the next buy signal. I also know that if I get out of a trade and have a good profit and I'm worried about it going up further, that I've dissipated that worry by when I take that money, I'm putting it into something else that might have a much higher probability of going up. But even if the one I got out of, which was getting out of it at the time that you should be starting to take profits, I got back into something, had a lot stronger upside potential and a lot more, or a lot less risk. that even if the one that I sold went up, more than likely the one I bought into went up. It probably went up a better percentage. SPPI came back up, but it's still in a downtrend. You stay short as long as it stays below the key line. LPTN, we were short. Notice the kicker signal that started this downtrend. Make this small. So this is what I call observe the obvious. The obvious is, which direction is this trend moving? Obviously down. So anytime I see a sell signal in a downtrend after it's popped up for a while, that means the sellers are still in control. There's a strong kicker signal. Where's my next likely target? Right down here somewhere. Yes, ICPT was the very next one. I don't know what's happening here. Is it my mouse? Well, shuzzbut. Something's happening here. Yeah, now, this is a case where you're in the oversold area and you started seeing buying. Probably a good place to take profits. But what would have been a logical place to re-enter a short? Well, when it came back down through this level, what did that tell us about the T-line? They weren't going up through the T-line. They're still heading down. Why is that relevant? Because you could pretty much put see where the support level was. This is really bugging me now. That's kind of a support level here. And it broke back down through that support level. You can stay short. Okay, whoops, I kept everybody over time. Are there any general questions? How long studying and trading candlesticks before you felt that you had good handle on them? Signals and patterns came quickly. Probably I started really gaining ability to see what was happening within weeks. Maybe back then, I always tell people that it's good to have somebody around when you're learning something like this to get a second opinion. I always tell people I didn't have anybody around to get a second opinion because nobody was doing candlesticks. The only time I could get a second opinion was when I'd go to the doctor and I'd say, "What's wrong with me?" And he says, "You're fat." I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So probably in about 6-8 weeks, about 6-8 weeks, I kind of cultivated that the 50 or 60 signals, out of them, these 12 kept coming up all the time. And then I started trying to get through the mental doubt. I mean, there'd be times where I think, "Oh man, this could keep going up. I see a sell signal, but I'm going to hold on to it." And it didn't take me too many weeks after that to realize you do what the chart tells you, because that's exactly what those signals are telling you to do. So then after that, it became more important trying to figure out how to keep your emotions. And that took me probably 6 to 8 months. So that's why we teach the sessions to say, here are the probabilities, now get your emotions out of it. Maria, let's see, I think we just had a woo on the 3rd. We were buying, we would have been buying nugget spreads, had it open positive, which it didn't, but we were buying the Splunk January 87 calls, and I just put out one today. Oh, it didn't execute, so it just went out in the chat room to be looking at the calls on Watt. Oh, how about that? that if this started trading positive, we were going to buy some calls on Watt. So we try to get. Blue is a weekly options. We have an options room where you can talk more terminology of option trades over there. Yeah, this wedge, or not the wedge, but we're looking more for a J-hook pattern. So we've got the main room, which we usually have 130, 150 people, depending on the day of the week. So, Maria, if you don't see any posts, email us, because that means something, you're not catching something. Oh, you can. I mean, anytime you can use whatever information. For example, well, what's happening here? You can see what's happening with crude oil. So obviously, the indexes tell you which way kind of the general trend is for that sector. Yes, this is what whether you're in the options room or not, when you look at a chart, what one was? Tomorrow, if Square opens positive, we're analyzing the underlying stock as to what it should be doing. How you buy that stock is up to you. You might be you might be buying options if you like to trade options, or you might just be buying the stock. So options are just one method of buying or controlling stock. Okay, Jim, let's go ahead and do the double line. And real fast, do the next double line, because I know you all want to be watching the Georgia-Alabama game. Georgia's winning 3-0. All right. FTK, another fry pan bottom. Wouldn't be afraid to be buying this one on positive trading tomorrow. And STG, same scenario. On these, just the only thing I can't see right now, but make sure your volume is good. But those are good looking charts. SID, all you can do right now is stay long. See if it breaks out through this range. So if I was long, I'd stay long. If I was long, my protective stop would be at today's open. Oops. HRTX. Yeah. Nothing. Ever since you went sideways, when it hit this top of this resistance and then did a bearish Harami Doji, if I was going to, I'd be out of it. If I was going to be back in, I'd buy it if it came back up through these highs. Right now, I wouldn't be in it. Not to say that some of these you wouldn't get right back in on the next buy signal. But if you're trying to make the best use of your funds, this one you stay long. You can see how you've gone into wave 3. You come out of ones that look iffy and move to better trade setups. SFIX, that one you can be buying on the little J-hook pattern. If I was buying this one tomorrow, wouldn't want to see it close back below the T-line. Delt, another one that's had a nice breakout. You can be buying this one on positive trading. If I was buying on positive trading tomorrow, I wouldn't want to see it trade at all back below this level. But where's your likely target at this point? where everybody else can see, right back up here. Now, I'd be more apt to be trading this one off a 10-minute chart just because of the new activity or the range of movement in it. LPSN, that's a good, that's a bobble breakout. I think we recommended that on what day? Can't find it. I know or maybe we just recommended it in the chat room. But that one I wouldn't be afraid to be buying on a positive open tomorrow, a Doji Sandwich breakout. XRF, that's, apparently I don't have enough there but I probably wouldn't be in this one. CLLS, stay long on this one, even though you've had a dark cloud. There's your bullish flutter kicker. Stay long until you see a sell signal and a close below the T line. Procter & Gamble is probably your quintessential, whatever that word is, institutional trader. I wouldn't be trading this one just because of the lack of movement in it percentage-wise. It's got a good chart, so if you like it, you can be buying it. You're just not going to make a big percentage return out of it. CUTR, a Morningstar signal off the 34. Another one you can be buying. If I was buying this one, what the heck is going on here? Probably buy it if it came back up through today's high. That would tell me they're breaking out of that little resistance level. Gilead, nothing of great consequence here. Got almost a kicker signal, but not quite a kicker signal. Still not a very good chart. There's just no direction to it. JDST, this one you can be buying on positive trading. Again, bullish Harami, told you the selling has stopped. Then your best friend, Doji gap up through the T line. Where's your first targets? Probably right up here. What used to be a support level may now be your resistance level. SRRA, you should be out of this one. Can't short it because it's below $3. I'm sorry, below $5. OTIV, another one that wouldn't be real intrigued until you see a strong buy signal. And Tiva, you can stay long as long as it stays above the T line. NTNX, nice little slow curve. You can be buying this one on positive trading. ARKW. ARKW. Not found. All right. INSEE. This one you get ready to buy on positive trading. There's your bobble breakout of a fry pan bottom. So if it opens positive, you can be buying it. Just don't let it close back below the 50. Momo, be ready to buy this one on positive trading. Your Doji Sandwich breakout. And Grub, nothing. Wouldn't be long or short. Just no direction on this one. CNIT, that's a toughie. So you need to be trading, if you're going to trade this one, you look for positive trading, and then with the magnitude of movement, I'd be most likely trading that off the 10-minute chart. CNET, kind of the same scenario. This was when we do our probabilities trading, what happens usually after a big price move. In this case, if I didn't take some profits here, or up here using the 10-minute chart, when it opened lower, close it out, then your buy is when it comes back up through that level. We did NVIDIA. Stay long on this one. Probably wouldn't want to see this trade back below today's low, bringing you back into the trading range. Edit. This one you should be out of completely. You could go short on it on weakness, but as you can see, there's really no direction to this one right now. So there's going to be times where you're in a chart that just doesn't look good. Move on to one that looks good. BABA, another one that you can stay long, but with the prospect of going through this level. So you definitely want to see a positive open tomorrow. DIIB, evening star type signal. I would have been out of this on any long. Probably wouldn't be going short. It's just now become a nothing chart. And TTS, stay long. If you're getting a little bit shooting star type signal, stay long as it doesn't close below the T line. PDFS, nothing. The best you can hope for is for it to come back up to the 200, but at that point, yeah, there's just no direction to this one. Wayfair, nice J-hook. This one you can buy on positive trading, anticipating a wave 1, wave 2. Notice the hammer doji hammer. If it breaks out through this level, you got wave 3. That's a good looking chart. ALGN. There's your doji sandwich. There's your continuation. Just stay long on this one. Expect it to come back up and test the highs. GALT. Just stay long on this one. Safety stop probably somewhere in here. If it came back down there, you're back into this trading range. That would tell you the sellers were taking control. This one you can be buying on the slow curve breakout. Where's your next target? He's filling the gap, getting you pretty close to the 200-day moving average. That was ESL, Verizon, not a very active mover. At this point, you want to be short. Notice all the shooting stars right here telling you they weren't going up further. And then when they came back down through the T line, I would suspect your first target could be the 34. Probably wouldn't be long or short this one right now. And EXTR, kind of a fry pan bottom. It wouldn't be anything I'd be buying just yet. But if you're long, you just hold it as long as it doesn't close below the T line. Advanced Micro, having trouble getting through the 200. So if it started trading lower tomorrow and you were long, I'd close it out. This really isn't a very good looking chart at all unless they can break through the 200. Weed not found on this service. Mara we did. Mara you can be buying if it opens positive and starts trading up above the T line. FRTA, if you're long, you just stay long. Notice your bobble breakout right here. NOG, just stay long. Notice your fry pan bottom. And again, observe the obvious. When it came up through the 200, what did it do? It came back and used the 200 as support once, twice. Now all you can do is stay long as it stays above the T-line. I think we did GCO, a bobble breakout about ready to occur. Again, a high probability trade. If it opens positive, your bobble breakout tells you your next wave is going to be about the same magnitude as that wave. Micron, I'd be someplace else. Sideways. Tesla, you could be buying this one on positive trading. First target is right here, and then you want to see if it's going to do a 45-degree off of this level. Nally usually pays a good dividend. You can be buying it on positive trading. I don't know what the dividend yield is, but it was pretty hefty a while back, like 14%. FLDM, nothing wildly exciting. If you like it, you stay long as it doesn't close below the T-line. HIB, I think, was pretty much sideways. Nope, it was sideways. Now it's broken out. Look for a wave, another wave to the upside. Stay long. At this point, if I was long, I wouldn't want to see it close back below today's open. That would tell you they brought it back down into the trend channel again. Yeah, dogs are 3-0. Fry pan bottom, J-hook pattern. On this one, I'd be a buyer if it came up through this level, the J-hook pattern. I'd stay long if I was long as it stays above the T-line. And CRR, just stay long. It came out of the fry pan bottom. Should be in wave 1, wave 2, going into wave 3. AKAO, fry pan bottom. I wouldn't be long or short until it got up through the 50. I wouldn't be in this one right now. UNH, nothing. If you are long, it has to stay above the T-line. If you're thinking of going long, it needs to break out through this level. Not a sell signal, but has to open positive. Yes. If it trades lower, you can see that you're stuck in that sideways. PITN. Another one that if you're long, you stay long. If you're going long, buy it above this level right here. Oracle, usually not much of a trader because of its institutional trading. If you like it, you can be buying it, but I'd just be conscious of this downtrending channel. So, yeah, wouldn't be a very, very enthusiastic chart. Nove, just stay long. Okay, and Jones, so now you watch to see if they stop taking profits and continue the uptrend. Tahoe, I'd be out of this one. More than likely they're coming back down here to test the 50, but you don't know how long it's going to take for them to keep supporting it. And where am I? OLED. It's another one that you can buy on positive trading. IPGP. There's a nice fry pan bottom. Now, usually this is just common trend analysis. I don't know what's happening with this thing tonight. That if there's an uptrend and they consolidate it, they'll usually, for crying out loud, they'll bring it right back up to that trend trajectory. Intel, nothing. There's no trend to this whatsoever. And CSX, that didn't work. CSX, you can stay long on this one. Ever since you're bullish engulfing, right smack dab off the 200, then your little best friend gap up above the T-line. Now you've broken out. I would just stay long until you see a sell signal. And KMPR, nothing of any great excitement here. I'd be someplace else. Now, it is doing a bullish engulfing signal right here on the T-line. So if it opens positive, you can be buying with a high probability that that's what they were doing, drifting it back until the 50-day moving average was catching up. Yes, POD, you buy on positive trading tomorrow. HCLP, just stay long, a bobble breakout. First Solar, nothing. Wouldn't be long or short. If I was buying this one, I'd want to see it break up through this level after a buy signal. ADSK. Kind of anticipate that as long as it stays above the T-line, you stay with it, but you definitely want to see it open positive heading up to the 50. If it opens lower, it definitely has to stay above the T-line. Overstock has been working well for us. Stay long with the anticipation it's going back up to the top of this channel. ADSK, stay long, but it has to open positive. Did I do that one already? Apparently I did. No wonder it looks familiar. AMAT, stay long. Good looking chart, going back up to the trend. I think we did LSPN. MZOR. That one, if you're long, has to open positive tomorrow. If it opens lower, close it out. If it opens lower, it's telling you that there's nothing there. When there was an opportunity to have something there, close it out. Just wait for the next buy signal. Another one that I would have closed out today because that was the message right there, that there hasn't been any stopping of the profit taking. I'd be someplace else. Western, another one that's just going sideways. I wouldn't be long or short. Big, not your most resilient chart, but it is supporting off the 50. If you're long or thinking of going long, I'd be a buyer if it came back up through today's open, telling me they're still taking it up. If it opened lower, it's bringing you back down toward the T-line, which means there's not a whole lot of bullish strength in that one. Amdocs, just stay long. It's not a very active one, but it's moving in the right direction. Robert, if you will email Abraham at candlestickforum.com, he'll give you the details. There's an extra fee to that room. We don't push it as far as any other service fees other than the fact that the people that wanted to concentrate on option conversations are in there, so that those option conversations aren't confusing people that are over in the other room. SIL, has to stay above the T line. Now notice you had a down day in an uptrend, but it wasn't a signal. So you're probably heading lower. Now you have to see what happens at the next at the support level. Silver kind of pulling back. Going to see if it's going to support at the T line and the 200. You can see that it's getting a little bit iffy up here. BRTX, just stay long. Notice how it used the T line as support already. And Nuance, slow uptrend. You can see it's doing everything to tell you they're supporting it. Came right back to the 200 and bounced back up after your bobble breakout. If you're long, you stay long. Just don't let it close back below the T line. LBCC should be out of this one. There's nothing there to make you want to be in this one. And did we do Intel? I thought we did Intel. Nothing. No direction whatsoever. I have my money someplace else. Wheat Inc. is Buzz. That's not working over here either. STKL. You could be buying this one, the slow curve breakout. Nice bullish confirmation. I would stay long. If you're buying, just don't let it come back below the 200. And ALXN. You could go short with the prospect of it coming back down. Notice your left-right combo, right smack dab on the resistance level. Here's your next likely target if they're trading it weaker tomorrow. All right. Yeah, some of those symbols don't show up on this service. CHFS. Got to make this one bigger. Well. Something's wrong tonight. I don't know what's going on. That's a better reboot. You could buy this if you, because of all the indecision. I've got to get this where the chart looks bigger. There we go. Yeah, I'd buy this one on strength. Use your 10-minute chart. Silica. Just stay long ever since your bobble breakout. Right here. The probabilities of a bobble breakout is extremely strong. Pot. This doesn't have anything to do with, I don't think, with cannabis. This is potash. I don't know why it's not coming up. VRTX, nice steady eddy, stay with it. And CERN, stay with this one. Now you watch to see if it can get through this level. So I'd use today's open as a stop. It shouldn't come back. Don, I usually come in a couple times a day into the options room, but we've got some extremely good option traders in there that give both good recommendations as well as tell you what they describe why that or what strategy they're using. AMAT, you can stay long. And Hudson broke out today. Look for it to go to the 200. A lot of stoners. Oh, potash merged? I didn't know that. Well, it's not very much. Yes, and yeah, Michael Tomset, which is probably one of your best online trainers comes in for about an hour each day. So I'll come in once or twice with ideas or just kind of reviewing which stocks we got that are working well. And then Michael will come in. He's more of the, fine-tuned or more detailed trainer as far as giving people lessons on how to use different strategies for candlesticks for option trading. Okay, so with that, I'm amazed at the number of books Tom has ghostwritten or edited in the option world. Yep, he's done a lot. All right, everybody. Okay, last one, and then EP. Oh, something is happening here that is not working well. EPLO. You stay long on this one. All right, everybody. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.